Yo, what's up? This is the author of One Smart Forex. On this session, we'll be talking about multi-time frame analysis. What do we mean by multi-time frame analysis? Multi-time frame analysis actually means you starting from higher time frame and scaling through all the time frames before you are able to pick a trade. You understand what I'm saying? You scale from higher time frame to a lower time frame. Then at the end of the day, you'll be able to deduct something that okay, I actually want to sell this trade. I want to buy this trade after you've done series of analysis running from the monthly time frame to weekly time frame to daily time frame to 4 hours to 1 hour, and then you pick your entry on a lower time frame. So it is very necessary for you to know the market structure in terms of long term. What do I mean by market structure? Like where the market is actually heading to. So now we'll be using NZDJPY as a case study. When you look at this NZDJPY, right from 2017, from this place, let me make use of my vertical line rather. From 2017, from this place, you can see that NZJPY has been on a downward trend. If you have a trading journal, you write it there that okay, from 2017, NZJPY has been on a downward trend. Can you see it is going down? Obviously. So the next thing that you need to identify on an upward trend, always know that okay, you are always looking out for what you're always looking for a lower low and what a lower high, right? A lower low and a lower high. So this is what this is the lower high, this is the lower low, this is a lower high, and this is what a lower low, this is what a lower high. Remember, this is what strictly based on monthly time frame, and this is what a lower low, a lower high, a lower low. So after a lower high, sorry, a lower low, we expect market to form what a lower low, then do what come back to form a new what a new lower low. Can you see? So if market should break this previous lower high, if this one now should break this lower high and move up, that means that what there is a shift in structure already, because we've known that okay, we are actually on what on a downward trend. Can you see my trend line? Let me remove all this nonsense that we have on the screen. So now can you see my trend line? So you see the series of touches. So this actually proves that we are actually on a downward trend. See what happens whenever market touches our trend line. Market has always been respecting this trend line. This is we have like, let's see, we have like 1, 2, 3, 4, 5, 6, and this is the seventh touch on this trend line. So we expect market to obviously do what? To obviously reverse. So not to break this our previous lower high. Can you see the previous lower high? So if market should break that previous lower high to the upside, that means that there's a shift in structure. We are no longer on a downward trend. But however, market is still on a downward trend because we've not break that previous lower high structure yet. You understand? So the next thing for you to do is what you remember that it is actually based on um a long term bias that okay, on a long run we expect NZDJPY to actually sell. So if you have a trading journal, you write it there, okay, based on monthly time frame, we expect NZDJPY to form a new lower low, meaning that we expect NZDJPY to actually sell. So the next thing for you to do, remember that we are strictly analyzing based on multi-time frame analysis. So the next thing for you to do now is what you scale through to a lower time frame. A lower time frame that is lower than monthly time frame is what? The weekly time frame. So you go to the weekly time frame and see what's up there. So this is the weekly time frame. So when you look at this weekly time frame, what can you see on this weekly time frame? On this weekly time frame as well, we can see that market has been forming series of what? Series of lower lows and lower highs. So you can just take your trend line to guide you. You can make use of your trend line as a guide. Can you see? So market has been making series of what? Market has been making series of lower highs and lower lows. So let me show you. This is a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then this lower high should not close above this previous lower low. So we expect market to reject, right? We expect market to reject and go and form a new what? To give us a new lower low, which is actually farther than this. You understand what I'm saying? Like which is actually which will be longer than this. So now weekly time frame and monthly time frame are both telling us the same thing, meaning that we are looking for what? We are looking for sell opportunity on this stuff. So now, however, it is important for you to draw out your key levels. So when you look at this place, you can see that market has been able to make something like a resistance here for us. Why is it a resistance? Look at it here. Market respected it here. One, two, three, four. So now fifth time is on it. Can you see that market has been respecting it in the previous days too? So now that is a key level on a weekly time frame. So you mark it out. So when you go down a little bit, you also see a key level here. Let me show you. This is also a key level here that serves as what? As support. The reason for drawing out these key levels, I've stated it in the previous classes, is for you to know your target and for you to know where you are actually going to. Do you understand? So now look at this. Can you see? Can you see the number of touches we have on this level, which is acting as what? Which is acting as our support. So now there is nothing more on a weekly time frame. We can't deduct anything on a weekly time frame again. So you go on daily time frame because that is the next time, which is actually closer to the weekly time frame. So now when you go to the what is it called? When you go to a daily time frame, what can you see? You can see series of ranging markets selling at resistance, buying at support, selling at resistance, buying at support, selling at resistance, buying at support, buying at support. Now this seems to have broken the resistance here. Can you see it? But we actually do not know what is happening. But based on break and retest, we could have assumed that this has actually broken the market and what came back for a retest, and we expect markets to move what do what to move higher. So now, if we have that kind of perspective, that means the perspective is very different from what we've been actually looking out for on what on weekly and monthly time frame. So here is also another key level which you need to mark out. It is very important for you. This is also a key level. Why is it a key level? Look at this place. Here, let me make use of this one. Here, look at this. So look at this. Respected it here. It respected it here. And you see, it also respected it here. Actually, you know that it has to be something in form of a rectangle so that it's going to cover a lot of candles. But I make use of horizontal line. You know, I told you that everything like this is what it is called. What's it called? I told you in the previous class. That's zone. It's called zone. Okay, you understand? It's called zones. But if you are say an amateur, you need to actually draw out the zones, making use of rectangles. For me using horizontal line, I actually know that okay, that's to cover at least most of the spaces. Do you understand? I know. But you as a learner needs to make use of what? You need to make use of rectangular line to actually depict those zones. Do you understand? So market did not get there before it reversed here. So now, based on that, if we actually want to buy from this, that means our first take profits will actually be this price, 73.206 will be our first take profit. However, there's nothing much to depict on this daily time frame. So we move to the lower time frame, which is the 4 hours time frame. So this is 4 hour time frame. On this 4 hour time frame, you can see something like head and shoulder, which is a reversal pattern that I taught you guys, which is a reversal pattern. that I taught you guys. Look at it. So, and whenever you have this reversal pattern, you know what is automatically telling you that okay, you should actually do what you should actually say. You understand? Look at this. Can you see? Can you see? So let me try and label it for you. So now this 4 hour is also correlating with the weekly time frame and monthly time frame with which we expected a sell on, right? So let me label it for you. This is the what? Um, this is the head, and this is the right shoulder. So let me make use of the text to label it. So that's the left shoulder, that's the left shoulder, and this is the what? This is the head, and this is the what? This is the right shoulder. So now NZJPY is leading somewhere, right? It's leading us to somewhere already. It's leading us to somewhere already. Can you see how? How do we know that this is actually a reversal pattern and we expect to sell? Market made what here? Market made a lower, an high low, then high low, high low, high low. We expect that this next high that resulted into the right shoulder holds to go above this, right? To give us another high since we're on an upward trend, right? To give us high since we're on an upward trend. But market could not go above before it reversed. Market could not go beyond the the previous what? The previous high, which is the head. So market reversed. Market reversed at this and formed our what? And formed our right shoulder. Meaning that we are looking out for a sell opportunity, right? But remember, while I was taking the head and shoulder, I told you that let me delete um all these things. Remember that I told you that market has to break the neckline. So in this case, this is the neckline. Let me pick out the neckline for you. So in this case, this is the right shoulder. You join it with this. You join the right shoulder. You join the right shoulder to this. So now this is the neckline. This blue line is the neckline. So now for you to actually be on the safer side, you should wait for market to actually break neckline, then come back for what? Come back for a retest. Then you can now sell to the nearest support. Do you understand? So that is actually the safest way to trade this thing. However, if you want to be greedy, that means you are going to take your sell from the formation of this right shoulder, then take it to the oh shit, then take it to the what? To the last support or the sorry to the nearest support. What am I doing? So you can sell it from here or wait or actually wait for the what? For the break, then you take it to the nearest what's it called? To the nearest support. So now let's check on 3 hours if we're actually on the same side. So now the head and shoulder now looks more visible. It looks more visible on what? On if you now zoom in, when you zoom in, we have a mini head and shoulder as well forming here. If you look at it, mini head and shoulder. Look at this one here. This is interesting. So that is the essence of doing what's it called? Multi-time frame analysis. That is the essence of actually doing multi-time frame analysis for you to unleash out So many interesting stuffs. So you understand. Now this is interesting because we are forming structure in structure. This is what is called structure in structure. Look at it. This is what? This is the shoulder. This is the left shoulder. While we are expecting what? Formation of what? Formation of what? The right shoulder. However, not necessarily has to form it, but however, this is what we are looking out for, and it is called bias. You need to have bias. So we want to form something like this, where this is the neckline for this head and shoulder. Let me zoom out for you to actually see it. So this will be the what? This will be the head. So we expect it to come and form the right shoulder at this equal length, at the equal length of this what? Equal length of this what's it called? Of this left shoulder when you look at it. So now this will be the neckline. Let me change the color. This will actually be the neckline. This will be the neckline. Can you see? So that will be the neckline of it. So you can as well wait for the break of this neckline as well before you trade. However, this is the overall on 4 hour, overall head and shoulder on 4 hour. This the left shoulder, the right, the head, and the right shoulder. But in it, in 3 hour, we are still forming another thing. So let's go on a lower time frame, which is the 2 hours, and see. So now it looks clear, very clear on 2 hour. Can you see it? Looks so clear on 2 hours. So meaning that we are waiting for what? For the formation of the right shoulder, then we can now sell down. So that means market is actually giving us another opportunity to sell if we've actually missed the opportunity to sell from this head, which serves as the right shoulder on 4 hour time frame. So let's go on 1 hour time frame and see what is actually happening. Remember, we are doing multi-time frame analysis. So seems that the structure looks so clear on what's it called? It looks so clear on um on 1 hour. Looks so clear on 1 hour. Can you see? This is the right shoulder. And sorry, this is the left shoulder here. This is the left shoulder. So we are expecting the formation of the right shoulder somewhere here too, so as to make equal length somewhere here to make equal length with this our left shoulder. So meaning that we're expecting it at somewhere here. So we expect this NZDJPY to actually go like that. So this is the neckline. Shift it a little bit up. So some people would think that okay, this is actually break and retest, right? That since it has broken this, that it is actually break and retest. So now this is what we are expecting. We are expecting NZDJPY to actually get to this level. Then we take our what's it called? Our position measurements to take this short position. We want to short it from here. We want to short it from here. So then we adjust our stop loss so a little bit above the right shoulder, like formation of the right shoulder. Okay, you understand? Then you take it to the nearest, what's it called? Nearest support. This is actually the nearest support, meaning that your TP1 will be here. This is the nearest support. Your TP1 will be here. Your TP1 will be here. That's like 50 pips profit, 1:5. So your TP2 will be the nearest. Let's look for the nearest support. So this is the nearest support here, this place. So pick out your zone, measure it out. That's the nearest support. So meaning that your TP2 will do what? Your TP2 will be here. That's like 200 pips thereabouts. That's like 206 pips thereabouts. Can you see it? So that is actually how those things, that is how they work. So you understand. So let's go on 30 seconds and see what happens on 30 seconds as well. So on 30 seconds, there's nothing much rather than we are expecting the form. This is the head. This is the head, but it is very clear on 2 hours and 3 hours. This is the head. So meaning that we are waiting for what formation of the right shoulder to actually sell. So there is nothing more on it. So remember that we started from a monthly time frame. On monthly time frame, remember that we are also expecting the formation of a new lower low right from monthly time frame. Right from monthly time frame that we've been expecting the formation of what a new lower low. We also went to weekly time frame. We also saw the same thing that okay, we are waiting for the formation of what formation of a new lower low. Remember, right, we started from here. The market should not close above this. That we are expecting a new lower low formation. We should be around this when we take our Fibonacci to actually see it. Shay, you understand? So then other confluences, remember that we made use of pattern as our confluence there. So you can also add your moving average or exponential moving average. Just go to the place of indicator, you add your 200 moving average, your 50 moving average, your exponential moving average, which could also serve as what? Which could serve as what's it called for you? Which could serve as confluence. To serve as confluence for you, like garnishing up the reason why you actually want to do what the reason why you want to sell. So let me remove all these things and show you another confluence which you can make use of. Another confluence which you can make use of is the Fibonacci. So this is your what? This is your lower high and this is your lower low. So retracement of this lower high. Take your Fibonacci, you draw it from that your lower what's it called? Your lower high. Take it to your lower low. So now market is currently sitting at the 0.88 level. Can you see? So that means the market makers actually want to sell from premium. They want to sell from premium. When they want to sell from the lowest price, from the highest price. You as a seller, if you want to sell something, you know that you always want to sell at higher prices. And when you want to buy something, you always want to buy from what? A lower prices. So that is what the market makers, that is what they also do. They also like to buy from higher prices and higher prices in such a way that um the the retail traders won't be able to afford it, and lower prices in such a way that they also want to buy in in uh in discount prices. You understand? As a buyer, and if you are a buyer, you will always want to do what? You will always want to also buy. You would always also want to buy at discount. So that is the same thing that happens to market makers in forex as well. They also want to sell at the lowest price, which is the premium, and they want to buy at a discount price, which is the lowest price. You understand? So we actually expect them to come down and give us what? And give us a lower loan, which will actually go beyond this low. You understand? Which has to go beyond this low. But however, that could be something that will happen around 2022, 2021, not this year again. Can you understand? Not this year, because the whole movement from this down to this up movement now, they started the movement from, can you see? They started from 9th March 2020. That means almost 9 months for this. So now for them to now come down again, it can take them additional 9 to 10 months to 1 year before they come down back and give us what? A low, which is actually lower than this low. So that is just the point. And um, we're actually done for this session. Do you understand? All you need is just to practice your multi-time frame analysis, and then be able to deduct something to actually trade. I'll give like 2 or more multi-time frame analysis, and we wrap up the class already, because I'm so much exhausted and I need to move on with other things in my life. Um, if you actually like this video and you gained one or two things, you can drop your comments and subscribe to the channel. Then you can also like. So do have a wonderful time, and I'm also using this moment to welcome you into a journey of forex trading.